Welcome back to Smart Money Moves, where we break down the latest news and trends in stocks, investing, and the economy in less than 15 minutes. All right, today I want to cover everything from Elon Musk selling Tesla stock, Apple, and their potential $30 trillion bubble, a brand new stock split coming soon, and then finally an update on GameStop. But first, let's start with this. It appears that this year could be one of the most exciting years for the stock market since 1987. The reason why is because after 2 years of the Federal Reserve buying trillions of dollars of stocks through their quantitative easing program, they will now be doing the exact opposite by selling those holdings, which means more money could come into the markets than ever before. Now, to show you how crazy this is, just consider that from 2009 to 2014, the Fed went from holding 0% of the mortgage market to owning 10% of it. In other words, they purchased so many mortgages during the pandemic that today they are now the largest holder of mortgages in the entire United States, owning more than all banks combined. So it's no wonder why they have such an enormous amount of influence over the housing market. But anyway, beginning this month, the Fed has begun shrinking their balance sheet by allowing some of these loans to expire instead of rolling them over. And once that process begins, there's no turning back. Speaking of turning things back, if you enjoy this content and you want to see more of it, make sure you hit the like button because it helps out the channel tremendously. And if you want even more, don't forget to join our free newsletter to get exclusive insights every week. Thanks again, guys. Now let's get back to the video. All right, now the first money move of the day is going to be something that could shock Tesla investors. That's because according to the company's latest stock filings, CEO Elon Musk has agreed to sell another 15 million shares of Tesla as part of his existing stock plan. That's right, for the third quarter in a row, the CEO has decided to offload millions of shares worth billions of dollars. He previously sold 8.5 million shares in the second quarter and another 9.6 million in the first quarter. And based on the average share price during the last quarter, Elon would have made about $1 billion in the last 3 months alone. And what's even crazier is that he still owns a majority stake in the company at 23%, or about $22.5 billion worth of stock. So imagine if instead of selling the stock, he had actually bought more of it. Think about how much money he would have made instead. Either way, earlier this week, Tesla stock was upgraded to overweight by Barclays. They increased their target price from $883 to $1,100, which is about 35% higher than where the stock is trading today. So if you're a Tesla investor, do you think the stock is fairly valued at its current price, or do you think it could go even higher? Comment below. Money move number 2 is going to be something that Apple investors need to hear immediately because despite the fact that the iPhone maker is still one of the most valuable companies in the world at $2.5 trillion, JP Morgan believes that the stock is heading for a major bubble and they're calling for it to fall 10%. That's right. One of the largest banks in the world is warning that Apple stock, which is currently sitting at $155 per share, could drop almost $16 from where it is today. As proof, they cite the fact that the tech giant has seen a recent surge in demand from China, where iPhone sales rose 20% last quarter, which is great, but also there's been a massive increase in production that rose a staggering 66%. So basically, they're saying that the massive jump in manufacturing is not sustainable, and at some point, Apple will need to scale back production, which means they might need to lower their expectations, which could eventually lead to a lower stock price. It's quite interesting because Apple isn't the only stock that's seeing this same exact trend. Microsoft is also being warned by JP Morgan to expect a similar 10% pullback after reporting record revenue last quarter. And if you look at the stock price, it's been consistently falling since mid-April. The third money move of the day is going to be a stock split that could happen very soon. That's right, Tesla might not be the only company this year to do a stock split. Earlier this week, Amazon announced that they will be increasing the number of shares outstanding by 20 to 1, meaning that someone who owned 1 share before the split would own 20 shares afterwards. And just like when Tesla split their stock last year, Amazon has also experienced huge growth in terms of valuation, since then jumping from $1.5 trillion to nearly $2.5 trillion, which is why it makes sense that they would want to do a stock split to make the stock more affordable. Currently, Amazon is trading at $1,500 per share, which is far too expensive for someone who wants to dollar cost average into the stock. but once the stock splits, it will become much easier to invest without having to spend tens of thousands of dollars. So if you've always wanted to buy Amazon but you couldn't justify the cost, now would be your chance. And finally, the fourth money move of the day is going to be an update on GameStop, which is something that investors have been waiting for patiently for almost 2 years now. That's because, as you know, the stock exploded in price in early 2021, jumping from $40 per share to a high of $483 per share. And since then, the stock has been on a roller coaster ride. And now, with the company announcing their latest earnings report, we can finally begin to get a better idea as to whether or not the stock is fundamentally a good investment or if it's all just hype. Well, unfortunately, GameStop did miss their earnings per share estimates by a penny, which is not a good sign. However, revenue came in above estimates by 4%, and just like with AMC, the story behind the scenes looks extremely promising. That's because in their latest conference call, management told investors that they plan to use this year's earnings to further grow the business by spending aggressively on marketing and expanding into new categories like collectibles. They said, "We are just getting started." So if you were a fan of GameStop and you wanted to buy the dip, this might be your chance. Just make sure you do your own research first. All right, now before I leave you with our final money move of the day, if you've been enjoying this content and you want to see more of it, don't forget to hit the like button because it helps out the channel tremendously. And if you want even more, don't forget to join our free newsletter to get exclusive insights every week. Now, speaking of exclusive insights, our final money move of the day is going to be something that will benefit all investors. And that's because legendary investor Bill Ackman just revealed that he used the stock market volatility of 2022 to make a killing with puts. If you're not familiar, a put is an option contract that gives the holder the right to sell shares of a stock at a specific price on or before a certain date. Basically, he was betting that the market would continue to fall, and if it did, he would make a lot of money. Well, it appears that his strategy worked because he just reported a 42.5% return for the year and 15.5% return so far this year. To be fair, he did take on a ton of risk by putting on 7 times more protection in the form of stock versus other investors, and he also had a couple of big losers throughout the year. For example, his investments in Universal and Netflix lost 30% and 10% respectively, but overall, he profited handsomely. And according to him, he has no plans of slowing down anytime soon. That's why these are the 7 biggest money moves of the week. So with that said, you guys, thank you so much for watching. I hope you have an amazing day, and just remember, the best is yet to come.